So the mortgage career path is something that many people get confused about. But if you get it wrong, it can be seriously detrimental to your long-term success, both financially and also with your mental health. And so that's what I'm going to unpack in this video today. I'm going to do a deep dive where we're going to use the whiteboard. I'm going to break through the stages of a mortgage broker career path and how they kind of branch into different things. We're going to look at the kind of income expectations, the stress levels in each of those, and hopefully you're going to be able to navigate what it is that you need to be able to do in order to have a successful career. Now, if you've got any questions for me, you can leave them in the comments and I will answer them for you. And yeah, let's dive straight into it. So the very first thing you have to talk about is the qualification phase, which is you need to get qualified. Now, to get qualified as a broker, you need either a CMAP exam, so you need your CMAP qualification, or you need your what we call RO1 and CF6. They're the kind of two main ones that you're going to get. Could also be CF1. These are effectively the exams you can do in order to pass, in order to be qualified. And because it is a regulated environment, you do need them. Most of the time, what you'll find is that most people go down CMAP. It's the most common route of all of them. And so it's usually the one that you go down, especially if you're self-studying. These ones here, which is interestingly the ones I have, I got that because I worked in a corporate company. I actually did my training in Connells, and I'm going to do a video on what that looks like, a deep dive into that as well as to what that looks like. But most places are going to be CMAP, so that's good for you to know exactly what to expect. So that's the training, the kind of qualification phase. Now you can go and do that in a multiple different ways. You can either go and do remote learning. You can go and do like self-learning. You could do a course, like go to like an intensive course. You can go and get a employer to pay for it and put you through the training. There's multiple different routes. However way works for you, that's fine. I don't really recommend any which one at this point. I have in the past. I find it's easier just to let you all decide which one works best for you. Which then brings me on to the bit that I want to talk about, my favorite bit, because the CMAP stuff is not stuff I'm that massively interested in. CMAP teaches you how to get to the qualification. I'm going to teach you how to actually do the job. That's the difference. So the next thing you have is the trainee advisor phase. So trainee advisor. Now, the trainee advisor stage is an interesting stage because, and I talk about this a lot, the learning curve within the mortgage industry is actually, we think it's going to look like this. Yeah. But actually, what it really looks like is that. All right. So the learning curve is steep. And so in this trainee advisor stage, it's going to be brutal, absolutely brutal. Now, a trainee advisor, what normally a trainee advisor is going to mean, it's going to mean that you're probably going to be supervised. So you're not going to be giving advice maybe yourself, but you're going to be attending other people's appointments. You might be doing some form of advice a little bit here and there. You are being supervised fully. You're not qualified. You've not got what we call competent advisor status, which we're going to unpack in a second. So that is that kind of initial stage. Now, I know when I was at Connells, what this looked like for us was like this. So we would have to like follow brokers. So we had to follow brokers around. That was really common. Follow the brokers around, see what they do, understand that. We'd have to role play a lot. So we did a lot of role playing. And that, again, is what happens in this phase. And then when I was at Connells, and if you're ever based that, we actually had to follow estate agents around too. So follow the EA. And the reason we did that is because we had to learn what they did. We had to learn about how it worked because we were obviously working inside the same branches of them. So there was a lot of that. There was also a lot of like registering with lenders. So you would, reg with the lenders. And what was interesting with that is like there's loads of lenders. So especially if you've got access to like whole of market or pretty much, you've got a lot of lenders to register with. So the trainee advisor stage is where you're going to make very little money. You might be on a basic salary, or you might, and maybe a bit of bonus or commission or what they call a guaranteed commission. But you're going to learn a lot, but you're not going to make a lot. And I talk about that in deep dive as to how brokers are paid and what that looks like in another deep dive session. So I don't want to go too deep into that. If you want to check that one out, I'll link that at the end for you, or I'll link it as well in the descriptions and stuff that you can see. But that is something that is quite important to know, is that in this initial stage, this training advisor phase, it's effectively everything up to the point where you have been giving actual advice and proper competent advice. So that could be anything, like I said, from just shadowing people all the way through to doing some form of supervised learning. Now, when you're self-employed, that's going to look a little bit different. So for self-employed, it's realistically, you go straight into like, you're a mortgage advisor and you're just going to do it. If you're self-employed on your own, that's what that is. But for this, and what we're talking about here, this is kind of more of an employed route, or maybe even like this is employed route. So that's where this would normally go down. Then from there, you then go to what we call a competent advisor status. Now, competent advisor status is also known as CAS. And what CAS does is effectively means that you are signed off you're effectively now a proper mortgage advisor, is the way to describe that. That's what you are. You're now an official mortgage advisor. You've been signed off by somebody who is already authorized and signed off as competent, and they say you're good enough. The supervisor, the principal has said, yes, we believe you can go out and give advice without people supervising you 100% of the time. And that's great. That's exciting. Usually what's going to happen is here with this, by the way, is what can normally happen here is you'll get a pay rise. Normally, that's what normally happens. If you're employed, you will be able to you might start getting commission. You might actually get commission now. So I know with us at Connells, for example, you got a pay rise. You also got car allowance. So you started getting your car allowance. So you start getting paid, effectively a company car if you were going to do that. But that's when you couldn't get it till you had competent advisor status. So you had commission rise. You could have a pay rise. You could have commission kicking in. You could start getting leads provided to you. So that could be another one, leads provided. That you might even be given a branch. So that's another thing that would happen at Connells is we given a branch. So once you were signed off, you'd then be given a branch to go and take over. The ones they'd actually deemed as stuff that they were happy for you to do. So that is quite an interesting phase, the CAS phase. Now, passing CAS, the thing that's quite interesting about passing CAS is I think this is probably the most stressful part of the job, in my opinion, is this CAS phase, because you've passed your exams, you're in this stage, you feel like I've got this certificate, this bit of paper that says I can do the job, and then you go in, and as I showed you with that learning curve before, if we look at that learning curve like that, you go in and it's like it's not what you expected. And I actually saw a comment recently on on this YouTube channel, and they said, I'm burning out and I'm overwhelmed, and I think I might have to quit. They're like 3 months in. That's a common thing to feel, and that's what this CAS phase is. It's very hard because it normally is going to take you, when it comes to CAS, it is going to take you 6 to maybe 9 months to do. That's how long it takes, and that's on a good bet. If you're at like a company that's providing you leads, a corporate company, that's what it's going to be. If you're on your own, that could take you 6 to 9 months, up to maybe even 12 plus. And many networks, if you are on your own, many networks will actually give you look, you got 12 months to do it. Some might give you 18 months. They might do 12 months and then they do an extension. So that's kind of how that works. Now, how CAS works with what it looks like is that the first thing to point out with CAS is that you have to do cases. So normally how it works, and it'll do this. Let me just draw on that. It normally is about 5 cases. Is usually the thing. It's about 5 cases. They need to be what we call green. Usually, it could be called. It could also be called. It could be called suitable or pass or whatever. But green is what whenever I've seen people, that's kind of what the main one I look at. So green means good. So 5 cases need to be graded normally as good. This will differ from network to network and company to company, but this is usually what it kind of is. Okay, so you need 5 of those in a row is usually what is needed. Plus, they normally have to see a role play of some sort. And that those cases mean being case checked. There'd normally be some sort of role play, and then normally it's registered with lenders. And that, I know when I was first training, that was what we were after. We had to see that. We had to register with lenders. CPD also had to be up to date. So CPD, just so you know what CPD is, continuous professional development. It's something you need to do as a mortgage broker. You have to do CPD, and that's normally when I got CAS, when I did, you had to have up-to-date CPD, you had to be registered with all the lenders, 5 cases at green, and the role plays all had to be signed off of discovery call, initial call, submission call, first appointment, second appointment is what they called them. I call them different things. But effectively, that's what you had to have. Now, passing it, there are a few things you can do to pass it easily. First one that I recommend you do when it comes to passing it is you note everything, okay? So note everything. What I mean by that is every time you're speaking to somebody, my dyslexia, I love this scribbling, every time you are doing anything on a case, it has to make sense to somebody who doesn't know the case. So you need to note everything. And what was described to me when I first trained was write it like it's a book. Like someone can read it and open it up like a book and they can understand the story. If they can't understand the story, that's a big problem. It's a huge problem. And that's probably the mistake people make. You know why you did something, but the case checker, they need to know why you did it. They need to be able to pick it up in 5 years' time when you've forgotten or they've forgotten or no one, whatever, and they go, yeah, we see exactly why you did it. The advice is sound. So note it like a book. You cannot over-note the case, in my opinion, which you'll get some people who say you can. I don't think you can. So just go all in on it. You'll be absolutely fine. Note everything you possibly can. The other thing you do is take on feedback. So I talk about this in many of my other deep dives, but take on feedback. Now, when I say about take on feedback, what do I mean by this? I mean the amount of people who get really defensive in CAS status is crazy. Meaning like, I didn't do that. I'm not bad. I'm not this. I'm like, well, if somebody who's good, who's supervising you, who knows the job, says you should improve because in these areas and points them out to you, make the improvements. Don't do the same mistake again and again and again. It's the definition of insanity, isn't it? Because it's repeating the same thing and expecting a different result. And I see this a lot more than you would think. That people just sit in here and they're like, oh, I know, this is a really good idea. Like, I've done it this way and the case checkers are after me. They don't care. To be honest with you, you're insignificant to them. And I know this because I know what it feels like when you're in that moment, because it feels like they're after you. It really does. They couldn't care less about you. You are insignificant. You're a blip on the radar of the rest of the thing. So don't get caught up in it. Take the feedback, make the changes, don't do it again. That's the way to do it. It's okay to learn. It's okay, we fail. We fail so we can learn. That's the whole point. But if you are just failing and getting upset about it, you're not learning. There genuinely is no point. You're just getting yourself angry and upset for no reason. And I don't want that. You don't want that. And they don't want that. So take the feedback. It's very important. I do see people in groups talk about this and they moan about it and the case checkers failed me. Just get on with it. It's fine. Like it's not a big deal. It will be over. You will pass eventually. The other one, and this is the one that I think is the cheat code, in my opinion, if you can get it, if your employer will let you have it, is 3 screens. So what I mean by 3 screens is when you have, let's unpack that a little bit more. With 3 screens, you have 3 documents that is needed. So you have what we call the FMA, which is the full mortgage application. We have the fact find, and then we have the docs, which is all like the bank statements and all that type of stuff. Well, all 3 of these things, they have to match completely. That's what has to happen. They have to match each other. If they don't match each other, guess what? That becomes a fail. That's that not green. That's a red. That's a fail. That's an unclear, whatever it may be, however they score it. So the way to pass CAS is that these 3 things need to match. Well, what you do with that is, and this is my simplest thing, and no one teaches this, it's crazy, but it's the simplest thing. 3 screens with the FMA on one, the fact find on the other, and the docs on the other, and then you just cross-reference. Bank statement, okay, income. How much goes into the bank statement? How much is on the FMA? How much is on the fact find? Brilliant. Date of birth, date of birth, date of birth. And you can go through them all. Just go through them all over and over again. It's very, very simple. People don't talk about this a lot, but I can tell you right now, if you've got a laptop and you just got your laptop open, and it's like, this is a 13-inch iPad, you get your laptop open, it's this tiny little screen like this, and you're like control tabbing between, command tabbing, control tabbing between all these different, there's that, then this, and this, and people go, I can just work on my laptop. No, you're asking for a problem at that. You're asking for a problem. Don't do that. Instead, 3 screens, 1 on each, clear, clean. It's so easy. So that's what I'd recommend you do. So now let's talk about the next part of your career. So the next part of your career is going to be experienced broker stage. So you're now going to be an experienced advisor because you've got competent advisor status. You're now an experienced advisor. Effectively, you're a mortgage advisor. Now, your role at this point, what will happen here is as time goes on, this is what you should be seeing, is you're going to start that learning curve. If we go back to the learning curve, let's go back up to it for a second. If we go to that learning curve was looking like that, but hopefully by now, you're going to be about here, okay? So you will have gone through this steep learning curve, And then it's going to go, or it's probably, and let me just kind of clean this up a little bit for us. It's going to be about there. What actually should happen is it will start to kind of go like that. So now we actually are on the trajectory that we were going before. So it's probably more like that, to be fair. And this is where I'd say that experienced advisor stage is, which is you've got CAS, you've passed, you've kind of passed your CAS, you've done a few cases. This is probably, I would say, about, in my opinion, I would say this is about 1 year in. Okay, 1 to 2 years in is what I would say that is. That kind of green line. And that's what I class as your experienced advisor stage. And this is where there's a few things that are going to happen, especially if you're employed. There's a few things. The first one on this is your income should start to increase, but it should increase steadily. So you're going to start to see the fruits of your labor paying off, because it takes a while. And like I said, go and check out how mortgage brokers make money and how it's paid. There's a deep dive on that. But effectively, you're going to be paid, and that's going to start compounding. So this is where you're going to start seeing that income increase. Now, employed, you're always going to make less than most. I mean, I literally saw a job role posted from one of my clients saying like, their advisors make 30 to 50,000, and they're employed. Some people make more than that, about 30 to 50 though. And that was quite interesting, because that's what I always assume. I know that's kind of what it was when I was employed at Connells, and I know when I work with other people, it's around that. You do hear these like 6 figures. It's very hard to do that employed, but you're going to start this role is you're going to start, your income should increase. And as you're in that first kind of 2 years, and that's where I'd say, if you're employed, I would say your income should be around that 30 to kind of 50, maybe 60K. That's going to be where you'll start to see it. Okay. So that's the income progression that you're going to hit as an experienced advisor, is you're going to start earning around that 30 to 60K. That's after your first 2 years employed. All right. What will happen though is your work-life balance is going to suck. Like, it's going to suck. Okay. Because employed, it will. Because as you get more and more established in this job, more people are going to come to you, and then they come to you, you're going to realize more clients means more money, and it just becomes an absolute nightmare. This is not a good job for work-life balance at the beginning. That's actually what I help people do, and we'll talk about that as they go through later on. But the goal is I help brokers get their work-life balance back while earning more, which sounds amazing. It is. I guess it's amazing. It's actually relatively simple if they just follow the process. But work-life balance, that becomes another thing. Also, stress levels. Stress is going to increase. So stress is going to go up during this time, naturally. It just will, because again, you're going to find that you're dealing with a lot of things, and you're gonna keep piling more and more on, and then this starts to become a capacity problem, especially in the mortgage broker employed stages. You start getting more people piling on more and more and more, and it gets a bit of an issue. So that's the experienced advisor stage. This is where most people normally kind of quit. What then can happen is you can move into the senior advisor phase. Okay, so senior advisor phase, the senior advisor is normally going to mean more money. It's going to be a higher payment increase. You might have a few people working underneath you, and that's fun. That's kind of effectively the same job. It's the same job, but you'll hear this a lot. Senior advisor, it's the same thing. So it's just, you'll have the trainee, then you'll have your kind of mortgage advisor, experienced advisor, senior advisor. That's kind of like the range you're going to have. This though is where the career line massively splits. So let's say if we're going to talk about employed for a second. This is the bit I get excited about. So it's not the employed bit. I couldn't care less about the employed bit, but I want to show you so you can see. But I love the self-employed bit, which is what I help people do. So this is where the career splits. Now on route 1, you're now going to go, if you're going to go down the corporate ladder, this is still the employed route. And what happens here is you're going to start going into management. Okay. Now this is like middle management. In Connells, we used to call them an MSSM, which is a mortgage services sales manager. Pro tip on that: if you're trying to get a job, connect with MSSMs or mortgage services sales managers on LinkedIn and approach them, because they're the people who are going to hire you. So there's a little pro tip on that one if you want a job. So you can go into that, and they will manage these MSSMs, or like effectively, management in any company. It's just sales managers. Effectively, they will manage a team. So these people are going to manage a team. So small teams, and the small team might be, up to 15 people maybe, and they'll manage maybe 15 brokers. They'll make a percentage of whatever their team sells. Okay, so that's how they make their money. They'll have a high base salary with a percentage of what their team sell. Now, these base salaries can range. I've seen different ones advertised and know different ones. Truthfully, they can range anywhere from like 35K all the way up to like 60K base is what I see, plus a car, plus high bonuses, and plus profit share. The really good ones might make 6 figures. The kind of mediocre ones, they'll might make, not mediocre, but like kind of middle of the range. They're going to make anywhere from, around that 60 to maybe 85, 90,000. So just under the kind of thing. But they're going to manage a lot of people, and there's a lot of bureaucracy. They are not selling anymore. They're not on the tools anymore. They're just going to manage teams. From there, they then go up, and it just goes further and further up the ladder of like what they call like a team manager, to an area manager, to a regional manager, to a divisional manager, to a national manager. Like it doesn't really make any difference. That's the management roles, and really they're very few and far between. They're only going to be in large companies, Connell's Countrywide, Just Mortgages, L&C, to London and Country. They're the main ones, I'd say, where you're going to see those. There's going to be others as well, but they're the main ones you're going to see that. That's where those roles are. If you want to do that, all power to you. I would rather stick pins in my eyes, to be honest with you, than do that job. It sucks, but you can do that if you want. But this is where the route gets very exciting, which is where you go off and set up your own brokerage. This is where this is cool. Now, your brokerage is, you have a number of things you can do. When you leave and go on your own, you can either go off and what I would call be like a solo business. So the solo business, which the positive to that is it's going to be what I call keep small / keep all. Oh, keep all. My dyslexic there, loving that. So the solo business is effectively this. You go on your own, you're good at generating leads, you've got you keep it small, you keep the business small, you keep all the profits. You run it from bedroom, you do Zoom calls, and you have a great lifestyle business. And you're able to make the same amount of money you made as a broker, but in a third of the time. Or you're able to make the same amount of money you wrote as a broker, but you're actually being paid for it. So in other words, if you're writing 200 grand a year, but you're only being paid 60,000 a year, you're able to write the 200 and make the 200. Or most of the time with these solo ones as well, you're able to go out there and you can make 60 grand a year working 2 days a week. Like if you're getting really good at it, if you're good at it, if you're not good at it, it won't work. So just so you know with that, but that's what the solo thing is. I love this one. I have advisors in the solo one. My highest earning solo advisor, just to put this into perspective, earns over 700K. Okay. So they earn over 700,000. They have no, they're unheard of, but he's a unique unicorn, but most of them, you can easily do 100 plus as a solo advisor on a very low kind of profit margin. I mean, most clients, if I would work with you, I'd want to get you to like 150 to kind of 250 is where the goal is of my coaching. When I help coach people, they're normally about 80,000. I'll take them to like 150 to 250 in the kind of coaching program for solos. That's what is a solo career. Great lifestyle business. Work-life balance is brilliant. Stress levels can be high because obviously it all falls on you, but it's a great lifestyle business. You then have this kind of small team. So the small team would look like this. So you have customer care, we have a broker, what we call a power planner. So this would be our small team, and this is what I call my staffing framework. And ideally, you're the broker here, and you would employ a power planner who does all the research in the back end. You have a customer care who does all of the kind of handling the client in the middle, and then in the front. And then you just sit in the middle and you just give advice. This is a really great way of making money, and you can quite easily reach kind of 300 to kind of 400 on that. But also this model works really well even at 150, 250 if you want like a really slick moving business model. That is what we call a small team. So you are the broker, but you're also the owner. So it's the broker / owner, but that is how that would look. That's the kind of business structure of the small team. The great. The bad thing this obviously is you don't keep it small. It's not kept, it's small, but you don't keep it all. You've got to pay different people. And that's kind of how that works. But the great thing about it is that you're able to start to kind of build real infrastructure and build a business, which is awesome. But still, you're at the heart of it. Or you can build, this is the one that I find really interesting, is you can actually build a firm. So you can build a real firm. And how you build a firm, you should have multiple advisors working underneath you. Now, the way that I recommend people do it within the program that I coach people how to do is, let's take our roles again. So we have our customer care, we have our broker, and then we have our para. And this is the customer journey. This is effectively the cycle of the thing. What happens is you, as the advisor, as the operator, sit at the tops with ops, is what I meant to say. I meant to say you sit at the top as an operator. And then you just hire more of the necessary people as you grow. So as this gets more and more, you might have 2 paraplanners. You might have like, for some reason our paraplanner, all of our people have very long necks, but you might have like 3 paraplanners, 1 at 2 brokers, a customer care, 2 customer care. You might, and what actually happens with this is the structure. This specific structure is how you, but it is my opinion, but it's also what I teach people. We've seen it done again. This is how you can build a scalable, and in some cases, I guess, we've got people who are doing it, trying to sell their businesses, building a business that they can sell. It's how you do it, because you are the operator now. Oh, I wasn't supposed to do that. You are the operator, and you just run your team. Normally where this would happen, by the way, and hopefully this gives you an idea of career progression, is it starts with this. So let's bring us back here. It's just you. And you do all of it. Customer care, you do the brokering, and you do the power planning. You're doing all of it in that one. So in that kind of solo one-man band, so you leave your corporate company, you go off on your own, you do that. Then you go to your small team. And you start to bring in your power planner, and you bring in your customer care person, and then you're the broker in the middle. You're that person here. But then once you're ready to expand, if you are at any point, then you move down and you can go to start to create a firm. This is going to be, the sky's the limit with the amount you can make with this. The income could be, some of my clients that I've got, I do advise with this, they're like 1 mil plus at this point. So this is the structure of your own brokerage and how you would build your own brokerage. Okay, so that's the kind of how that works. Now, I've spoken all the way through this about how much brokers get paid, how they get paid, what it looks like. If you want to know what that is, check out the other deep dive video I've done. It's a whiteboard one explaining in detail the stuff that they don't want you to know about how you actually get paid as a broker, so you can make a decision as whether or not it's the right career for you. So give it a click. It's on screen right now. Go on, click on that one right there. And if you've got any questions, drop them in the comments.